Okay, the next reversal chart pattern or price pattern on our list is the double bottom price pattern or formation. The double bottom price pattern or formation is a flip of the double top price pattern formation. It is a bullish reversal price pattern. Okay, it comprises of two price depressions or price dips of about the same dimension, depth, and width. Upon formation or appearance of the double bottom price pattern in the market sentiment turns bullish. Okay, the double bottom price pattern or price formation is usually seen around regions of market bottom or regions around extended bearish price fall or extended bearish markets that is due for a reversal. The double bottom price pattern formation comprises of two price depressions and a neckline as illustrated or represented in the diagram before you. To trade the double bottom price pattern effectively as a trader, first off, following the formation of the first bottom, which is represented as B1 in the illustration before you, you wait it out and observe for the formation and completion of a second price bottom, okay, or depression. Once the second price bottom begins to take shape or begins to develop, you draw a trend line, which is also known as a neckline, above the price formation. Okay, between the two price bottoms, B1, B2, as represented in the illustration, is a price furrow, okay, or a sort of peak between the two price depressions, okay, and that's a suitable point for the placement of the neckline. So you draw a neckline or a trend line above this price peak between the two price depressions, okay, then anticipate a breakout or movement of price above this neckline or trend line of the pattern formation. So once price breaks above or move above this neckline, okay, is a clear signal or a telltale sign for the execution of a bullish trade. So as a trader in the market, once this happens, you should hit the buy button or execute a bullish trade. So the double bottom price pattern is one of the commonest bullish reversal price pattern. So, and as mentioned earlier, the regions of the price chart or price formation to anticipate this chart's pattern formation is around regions following extended bearish markets or bearish price fall and regions of bullish price reversals, okay, especially around regions of the market bottom or rounding market bottoms. Okay, right here is a typical example of trade execution or bullish trade execution using the double bottom price pattern or chart pattern formation. Okay, as represented in the AUD USD currency chart right here, okay, we have a bearish, an initial bearish price fall, okay, which was met by a resistance which causes price to move back to the upside, forming the first bottom right here. Okay, so this downswing in price or swing in price to the downside represent the first bottom of the double bottom price formation. Thereafter, price made another swing, okay, which is represented by this second region of the price chart, okay, representing the second bottom of the double bottom price formation. Okay, so following the completion of the second price swing, okay, to the upside, okay, which comprises the second bottom of the double bottom chart pattern formation, we anticipated a break above the neckline of the price formation. Okay, we place a neckline above the price formation at this region and waited for price to move above it. So, and when that happened, okay, you could see from the chart, once price moved above the neckline of the double bottom price formation, we executed a bullish trade from this point of the price chart. Okay, and following the execution of the bullish trade, you could see price moving to the upside or continuing its ascent to the upside. Okay, so the double bottom price formation is a bullish reversal price pattern or formation, and it usually takes the shape of the letter W. Okay, so right here is the double bottom price formation, and then once the pattern is completed, which is confirmed by the movement of price above the neckline of the pattern formation, okay, you can execute a bullish trade or hit the buy button. So before us is another instance of the double bottom price formation. Okay, on the Euro USD currency chart right here, we have the formation of the double bottom chart pattern formation right here. Okay, the first swing in price or downswing in price, which is followed by a subsequent ascent or rise in price, represents the first bottom of the double bottom chart pattern formation. Okay, upon that and after the completion of the first swing, okay, price fell to the downside again in preparation for the second swing in price to the upside. Okay, following the development of the second price bottom, we place a neckline above the price formation and anticipated a possible break above the neckline to the upside, okay, as price continues its development or movement to the upside. And once that happened, as represented in this region of the chart, we hit the buy button to execute a bullish trade. And as shown on the charts, you could see price continuing its ascent to the upside following the breach of the neckline. Okay, so the double bottom price pattern basically comprises of two price bottoms, okay, and a neckline. So once price forms the W shape of the double bottom price formation, place a neckline above the price formation and anticipates a possible movement or breach of the neckline or movement of price above the neckline to the upside. And once this happens, you should execute a bullish trade. To have more of useful videos such as this delivered to you, simply hit the subscribe button and the notification bell. Thanks for watching.